All right, what's up guys? Anthony here, Special Analysis. Welcome to the video. We're going to wrap it up this evening, recapping the first trade setup that we came upon live this morning at 8 a.m. Eastern Standard Time. So very specifically, I told my traders as we were going over the markets, I started with the indices because, well, frankly, they looked like they were going to go lower, and that's exactly what happened. So I marked off these very specific areas that if we broke this low on the Nasdaq and closed below it, and same thing here on the S&P, that we were going to push lower. Lower to where, right? So we had respective targets for each market. The S&P, we were targeting 51.8975. And the Nasdaq, we were specifically targeting 18,090.75. And as you can see, very efficiently, price left the area we expected it to and traveled right to the area we also expected it to. Okay? 50 predictable ticks here on the S&P, a 5-to-1 risk-reward ratio, risking 10 to capture 50 at the target. I mean, it doesn't get much better than that. And for the Nasdaq here, a 6.85-to-1 risk reward. You were risking 33 ticks to capture 226 ticks. Not so bad, right? Listen, if you don't have a full understanding of how to interpret price action and volume, putting that together, creating a context of what the market's doing, when, where, and why, guys, it's really hard to identify these low risk, high probability setups. Now, I'm not telling you that I'm right all the time. I'm not telling you that something can't change in an instance. Taking losses is certainly part of any successful trade plan. Taking losses is certainly part of anybody's psychological approach to the market. These are all components that are what they are, okay? But when the analysis with the price action and the volume align with the market context, there's a better than not chance that we should see some follow through. Now, I'm a huge proponent of paying yourself and protecting yourself. A position very aggressively and very quickly goes in your direction of anticipation. Take some profit, move your stop to break even, sit back and relax. Okay? We had substantial targets. Give the market a chance to reach them. Now, I very often play, I shouldn't say very often, I always play the Nasdaq and the S&P alongside each other. Those two markets are probably the most correlated of the indices. So I am very specifically looking at what the volume's doing, what the price action's doing. Are they working together? Are there technical indicators all showing the same? Meaning, is the momentum looking the same on both of them? Are they both leading their moving averages? Are there, MACDs showing that they're both heading in a same direction? And is the price respecting, one another? They should be moving fairly in sync. I'm not saying tick for tick, but if you look at the two charts, you could see we had a very obvious floor where we rebounded on both markets. We came back up, failed to push any higher, and we were just simply waiting for the markets respectively to close below these prior lows. And as soon as they did, they sold off basically instantaneously. Now, keep something in mind. They're going to react to each other's technical targets. So if we're short the S&P, but the Nasdaq's hitting technical support, we definitely want to make sure we're taking some profit on the S&P. On the flip side of that, if we're short the Nasdaq and the S&P is coming into some technical support, we definitely want to take some profit on that as well. You could see here that the S&P was really the market that hit its target, and that was it, right? The sellers were not able to push below it. And at the same time, if you notice, when this candle closed, this candle reversed, the Nasdaq did exactly the same thing. That's why it's so important when you're trading one to be monitoring the other. Now, of course, The Nasdaq is a much more aggressive market to trade, and that may or may not be for you, right? But even if you're just trading the S&P, that's fine. There's still no reason that you shouldn't be looking at the Nasdaq as well, even if that's not where you're putting your risk on. Okay? I'm a huge proponent of pairing these two markets together. When they are working together, there is a higher probability that your analysis, your price action, your volume, your thesis, your market context is going to have a higher probability of working out. Okay? When they're kind of disconnected, well, you get what you get, all right? So for me personally, if I'm going to put risk on in either one of these markets, I want them ideally working together. Just like you see here, they work together this morning. This was the first trade setup of the morning. Guys, if you crush this trade, there was no reason to even trade the rest of the day. 50 ticks on the S&P or 220 plus ticks on the Nasdaq. Pack it up, call it a day, enjoy the weather, go for a walk, do whatever. I mean, that's the whole point of trading, right? To achieve a lifestyle that allows you freedom, right? Because there's nothing more valuable than time. So if you can come to the market in the morning and you can place a trade and you can be done by 8:30, 8:45, there is no reason to spend another minute in front of the computer, in my humble opinion. Because if you keep trying to trade the market, what happens is you have a winning trade, you get really greedy, you feel really confident, you end up giving it back. Now you're trying just to get back to break even. And next thing you know, a beautiful winning green day turns into a red day. I see it happen all the time, folks. And it is the worst thing that you can do for yourself, both financially and psychologically. It takes a beating on somebody when they do this. And it's just so unfortunate because most people just don't know when to stop trading. More often than not, the first trade I take, if it's a winning trade in the morning, I am done for the day. Right? I'll finish up my clients, I'll pack it up, I'll do the rest of my work, and I will literally walk away from the computer because there's no reason to put any more risk on. I know what I need to make to live. Right? And if I'm making that, what am I doing? Right? Beyond that, I'm just gambling. I'm guessing. I'm hoping. Right? Now I have this cocky feeling that, you know, I can make more, but yeah, maybe the next trade I take will be successful, but maybe it won't. Right? And very quickly you just gave back your gain, and now you're fighting just to regain the gain. And next thing you know, you're just making silly mistakes. Right? Because you become unhinged from your trade plan. And that is the absolute worst place you can possibly be. So, hope you enjoyed this video. This is what we do every day, right? From 8 to 11, we look at the Nasdaq, the S&P, crude oil, and gold. We look for trading opportunities built around volume and price action. We put together market context and a thesis around that. We discuss it. We talk about what would trigger the opportunity. What triggered the opportunity this morning was a break of these prior lows, the lows here on the S&P, the lows here on the Nasdaq, and we had specific targets in line on the screen that I share with my traders. Whether you're ready to take that trade or not, I certainly can't pull the trigger for you, but I'm just here to give you the analysis, the interpretation, and the expectations so that you can make the best decisions for yourself. Guys, if you enjoyed this video, I simply ask you to like it. If you have a question, feel free to leave a comment below. If you have not subscribed to the channel yet, please do so you don't miss the next video. And if I can be of any assistance to you, my email is down below. Feel free to reach out to me. And if you'd like to join me live every single morning, if you would like professional analysis, if you would like trade ideas, swing trading, position trading, the whole 9 yards, guys, I have bundled it into the most lucrative, fairly priced package that I believe exists anywhere on the internet. Many people would charge you thousands and thousands of dollars of each component of what I'm sharing with you. So again, I appreciate each and every one of you. Thank you. God bless. And I will see you in the next video.